are we Trojan horsing Bitcoin into the infrastructure of the world? Or is, the government Trojan horsing stablecoins into Bitcoin?
How does KYC play into all of this? Because if Lightning is going to find its way into our existing financial system, then you're going to need KYC in some capacity. Otherwise, that's a big problem.
Yeah. Okay. So there's going to be different answers for different people.
What can people do to increase the probability of success or increase the time in which we can Bitcoinize the world, I guess?
Our job is to move the entire global economy onto Bitcoin. How are we going to do that?
I'm curious your thoughts on the knots versus core issue. What benefits do we have if we increase the op return to 100,000 bytes? Like, how does that make Bitcoin better?
Where it becomes very challenging is that
All right, Jesse, thanks for coming.
My pleasure.
Yeah.
Thanks for having me.
Happy to have you here. And so I'm not a super technical guy. I've talked a lot about Lightning over the years, being a Bitcoin enthusiast. I can't fully wrap my head around the whole protocol, how it works. There's a lot to unpack there. But so I figured we should start with explaining to me, like I'm 5 years old, what Lightning is, why we need it, and how it works.
Yeah. So Lightning really started as a way to scale Bitcoin. Can I pack more transactions into the same amount of data by using this scaling technology? And it's something that Satoshi wanted to do for a long time. He was focused on replaceable transactions, but with the Lightning Network, what we were introducing is a way to say, I'll do one transaction just to get a relationship started, and then be able to update that relationship, but have those updates be outside of the Bitcoin blockchain, which means that you don't need to change the Bitcoin blockchain at all. It can remain immutable, which is one of those things that we like about Bitcoin. So because we've got now the Lightning Network, it enables us to say, I'll have a relationship with one other person. I could have a relationship with you. And whenever we have this relationship, we can basically provide updates or actually do microtransactions back and forth over the life of the channel. And that relationship can last years, or it could last like as short as, a week or even shorter. But basically, it's created this structure that is very scalable. So we can have an unlimited amount of transactions just between us. And we only need to tell the Bitcoin blockchain if anything goes wrong or we decide to end the relationship. So one transaction into Bitcoin to start a relationship, a Lightning channel, and then one transaction at the end when we're just kind of deciding what's to be done with the money that we had in this channel. The analogy that I like to use is a joint account. So someone is going to put in money into an account, and over the life of it, we'll just have a conversation about who's getting what when we decide to part ways in this joint account. And I think that's most close to actually how the system works.
Interesting. Are you aware, I'm totally unaware of, if Satoshi had grappled with the idea of scaling Bitcoin in layers or increasing the block size?
Some of those conversations were before my time. Mm-hmm. And so I probably wouldn't be able to comment at length, but I think there was an acknowledgement. There's only so much space in here. And what we saw with the 2017 block size wars was basically, do we want to increase the size of blocks, or do we want to decrease the block time? So instead of every 10 minutes, well, there's a whole set of trade-offs that you could do. But there's consequences, whatever way you decide. And I think what has happened in the past, and I think Nick Bhatia has really highlighted this now, is that you can scale money in layers. And so that's probably why he called his book, the Bitcoin layer.
Yep.
But basically you can, one way to look at Lightning is that it is a second layer on Bitcoin. And it really is just a smart contract on top of Bitcoin saying who gets what and who's connected to whom.
That makes sense. And so who is currently innovating on the Lightning Network? A whole group of people, from what I understand, globally distributed. It's a free and open protocol similar to Bitcoin, correct?
Mm-hmm. Yeah, you could look at Lightning Network as the most decentralized layer 2. And there's different groups here. So there's some folks that work on the protocol itself. So these are like how the system operates. So that would be like Lightning Labs, Blockstream would be in there working on core Lightning, as well as some of the Spiral folks working on LDK. So that's the protocol. And then there's the application and the infrastructure. So Amboss really works at the application level. So we've got all this information that's happening in the protocol, and there's messages that are being passed, but Amboss really functions as a coordination, so as an application, and it's kind of how people will interface with that protocol. Then there's infrastructure pieces like Voltage that are running these servers, these nodes for people. And then of course there's different applications, like exchanges may integrate it, or there might be users. There's wallets that are interfacing. So there's different layers, protocol, application, and then usage.
And in the development of the Lightning protocol, what are some of the hurdles we're in the midst of overcoming?
One piece is, what do you do when the relationship doesn't work out? Right now,
describe that. What do you mean? What would you do when the relationship doesn't work out? Two parties or a multitude of parties open a channel or using a channel, and there's some sort of a dispute amongst that channel?
Dispute would be a big one.
Mm-hmm.
But what do you do when, one person just stops responding? We have a joint account together, and I want to, I have my money in this account with another person, but what do I do if I don't hear from them, or their, server's offline? And what does it mean if they decide to exit the relationship? There's this idea of a force close, which basically means when you have this joint account, like you always have your bags packed. I have a signed transaction from the other party and from myself that says I get this amount of money. And that means I don't have to trust anybody else. So it's a very powerful tool, but it's not the most efficient way of dealing things. Like we could actually have a conversation in order to part ways, keep things very neat and tidy. Or I could say, well, my bags are packed. I'm leaving.
And would you pull in that circumstance? Would one party be able to withdraw all the liquidity in that channel?
All of the stuff that was theirs.
Okay.
And there's actually one of the things that needed to happen before Lightning got started was SegWit. Like that was the unlock. That was kind of what was being debated in the Blocksize wars. And what SegWit fixed was the idea that there is an order to transactions. That you don't, it got rid of this like idea of transaction malleability. So you can't like swap things around in the Bitcoin blockchain. And SegWit fixed that. So what we have as a result is if you decide to, part ways and you've got a signed transaction that says, I have this amount of money. Well, how do I know that that was the most recent state? You could have gone and said, oh, I have an old transaction and I'm broadcasting that says I have more money. Now, it sets up a really nasty situation because like you provided old information And so now with the Lightning Network today, I can say, I have proof that that transaction that you broadcast was old and you cheated. So as a consequence of you cheating and me having the proof, I can say to the Bitcoin protocol, I actually get all of the money that was shared between us because I have proof that you attempted to cheat. And that's the way that the protocol works right now. It's a little bit ugly, but it's a powerful disincentive to cheating.
Interesting. And these channels, the parties need to open the channels and provide liquidity, correct? What does that look like? Because that seems to be one of the issues that Lightning is dealing with is liquidity. Like I was in Madeira last year, like we were just talking about before we were recording, and I was using the Phoenix wallet. And if I recall correctly, because I'd asked Ben Sessions, I was like, hey, what wallet should I use? Because everybody's buying coffee and water and whatnot with Lightning, which worked fantastic actually. When people are like, Bitcoin doesn't work as a medium of exchange, I'm like, it was faster and easier for me to buy coffee and carbonated water with Lightning than it was my American Express Platinum card, which was really like an interesting moment for me. But if I recall correctly, you said that I needed to provide enough liquidity into my Phoenix wallet. I can't remember the specifics around that, but I do understand that liquidity is a potential issue right now with merchants and anybody who's trying to use Lightning. You need to either get onto a channel that has enough liquidity or you have to open one up with liquidity. Can you unpack that? Like, like I said, I'm not super tech savvy. And so how would you break that down?
Sure. So it really starts from the idea that Bitcoin needs to be fully accounted for. So I can't create new Bitcoin, and I don't want to. I like the fact that Bitcoin is debt-free. So because of that decision, we deal with this concept of liquidity. So in order to make a transaction happen, you need to have the money. And that needs to work with multiple parties because in Lightning, it's not just one joint account that is in operation. They're actually linked together. And a transaction can propagate. It hops from peer to peer, updating each joint account as it goes. And in response, you get proofs along the way that a transaction did occur.
And these joint accounts, they're Lightning nodes?
Those are Lightning channels.
Okay.
And a Lightning channel connects to Lightning nodes.
Okay.
So I'll run a Lightning node, you can run a Lightning node, and we'll have a joint account between us, a Lightning channel, saying who has what money. And this idea of liquidity means that I could pay through you to another destination. But in order for them to actually receive the money, well, you need money on the other side. It's like someone needs to be able to send you the money. And if they don't have the money to send to you, well, then I can't use them as a hop. They don't have
that makes sense.
Enough liquidity to actually do two things, which is one, receive money and send money. So there's two operations that are happening when you're routing a payment.
And the incentives around providing liquidity to the Lightning Network, has that been an issue up until this point? And it's my understanding that's something that you're working on with Amboss.
Yeah, I think there's...
You could correct me if I'm wrong, if that's a totally misplaced question.
No, I was just thinking about how to answer it. Okay. Because like the incentives are there. Because every time you pass along a transaction, you actually get paid for it. You set the market rate. Like you set what fees you charge. And you could think of liquidity as infrastructure. Like I'm using my Bitcoin, not just because of it's an investment asset, but because it actually connects to people. It's like paving a road instead of with gold, but it's with Bitcoin. And, I like to think of things in terms of like transportation networks. And so we're kind of like paving this highway system, this transportation network using Bitcoin. So that's the fundamental idea. And every road functions as a toll road. And you set the fees. So now, like, anybody that pays is actually making a decision about which route do they want to take. What is the most efficient way to get to my destination? Like, they're basically using Google Maps. And like, really, that's where Amboss functions, is probably on the intelligence layer, saying, how do you get from point A to point B? And how can we create a smarter transportation network for money?
And how is Amboss working on that?
So we do a lot of research on graph theory, which is like the math behind networks. And so this is like some old concepts, some old mathematical concepts about like, not, I don't know if you've done those puzzles where you're like trying to draw a line without crossing your own path.
Yep.
So that was like one of the earliest ideas of graph theory. It's like, how do you traverse a network and structuring things like networks? And then we also have research on machine learning. So how do you, like, what change should you make to a network to add efficiency? So when we're dealing with this problem of liquidity and whether payments can be made, what change should you make to a network where there's 14,000 nodes? Who do you connect to? Where should you make this new channel to meet with like your economic interests, or use it to support the rest of the network? If you were to build a road today, where would you want to build it? Would you build a bike trail, or will you build a super highway that you could bring huge trucks across? And that's the type of intelligence that Amboss is delivering, to actually provide recommendations and insights when the decision space is so huge. Like, I have trouble deciding what to eat when there's more than 8 items on a menu.
Oh my gosh, me too.
So we've got like decision paralysis. So what you actually need, especially when the decision is expensive, is you need data analytics to actually be able to help you make this decision.
And what data is Amboss looking at? You're looking at Lightning nodes globally, and the liquidity in those nodes, and you're effectively trying to figure out how to connect. I'm struggling to understand. So are you following the hang up?
Yeah. So there's like different ways to do it. There's an entire industry here, and like, this is a new space. So we really are dealing at the cutting edge of this to decide, okay, if I'm, at point A, how do I get to point B most efficiently? Like, do I know all of the paths that are possible, and what's the best one? Which one's the most likely to work? So that's one problem. And then there's another problem of, okay, now I'm going to change how the network is structured. What change should I make? What would be most beneficial to everybody if this road existed? And so part of this is analyzing the network as it is today, and then analyzing a future state. What could the network be, and how would it function? And then there's some like brass tacks about can we do all of those changes, or what can we control out of this? And then, once this network is created, it's an entire economy. Every single hop in this network costs a different amount. So we're dealing with incredible levels of complexity. And because the Lightning Network is completely trustless, this is something that is very important to work on, because it means that, I don't need to rely on anybody else. I can have completely permissionless money, but it is hard and it is complex, but it's worth working on.
If you're anything like me, you understand that Bitcoin is something we can use every day to connect, to collaborate, and to build stronger, freer communities. As true Bitcoiners, you all know we are each responsible for onboarding more Bitcoiners. That's why I chose to partner with Cowbolt, an expense splitting app that settles in Bitcoin. It can be as simple as splitting a dinner bill. Your friend covers dinner and you reimburse them, but you send it back to him in Bitcoin. Now your friend has their first sats, and as I always say, where your money goes, the mind follows. By using Cowbolt to get Bitcoin into the hands of your friends and family, you can help us orange pill the world. Cowbolt is built to let you split costs, share expenses, and settle instantly, while always keeping full control of your keys. Cowbolt is simple, social, non-custodial, exactly how Bitcoin was meant to be used. If you're serious about Bitcoin, it's time to act like it. Download Cowbolt today on iOS or Android. To learn more, go to cowbolt.com. Again, that's Cowbolt, COWBOLT.com. Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE.
As you've been talking several times, I've thought to myself, like, this seems like a potential problem that Mycelium could like sort out. I think it was in, I don't know, Japan or something. They were trying to reorganize the city, and they made a little model of it, and they put some Mycelium in there, and it found the most efficient path. Is there any parallel there, or am I totally just off in the weeds on my own?
The slime mold experiments is basically like, if you create some food in different places. And I think they did it on a, population or a network of cities, and they made like food equal to population. And as a result, the slime mold basically created the exact transportation network that exists for these population centers.
That's so
it kind
wild.
of just grew in that direction. But like mycelial networks are, fascinating. It's not incredibly smart, but they've got a couple of little data pieces that actually influence how they create their network and how they work together. And because of basically Lightning Network is very similar in that respect. We have limited information because the folks that built the Lightning Network protocol, they came to this with this idea that money should be private. We should have transaction level privacy. But as a consequence of that, that means that the entire network doesn't talk to each other. Like, there's certain information that just isn't shared, and there's consequences to that. So if all of the mushrooms in the world were able to share all of the information, well, it could be really smart, but it is a more complex thing, and it would cause, some centralization, and it would also disrupt the privacy of things. So in the Lightning Network, we've got privacy, but it lacks a coordination function. And so in a lot of ways, this is what Amboss provides, is that if I can know a couple more pieces of information, we could actually create a more efficient system, but do it in an opt-in way. So you don't have to use Amboss. You can just use the Lightning Network protocol, but you could be more efficient if you actually communicated with your peers and were able to create a more efficient system.
And how is Amboss analyzing all of this data? Because it seems to be probably pretty difficult to do.
I think we started with just create a database, just record what's happening. At the Lightning Network protocol level, there's this thing called gossip.
Interesting.
Yeah. So Bolt 7 in the Lightning Network protocol is basically saying, I exist, the node announcement. And you tell your peers, hey, I'm available for connection. Here's how to connect to me. So we started, right there. Or, hey, I just created a new channel. Who wants to use it? Who wants to route a payment along this path? And it's basically kind of just broadcasting information. It's not perfect, but that's what we started with. So Amboss started as a Lightning Network Explorer and is aggregating this information, which is just publicly shared. And so as a result of that, we can look up any Lightning node on the network, see all the channels that have been announced, and kind of just provide some data visualizations. Like, okay, what fees are you charging? What does this toll road cost? And be able to see all of the connections. So that's where we started from. And then building from that, we created a marketplace to say, hey, I could really use a connection from you in order to receive a payment. Let's make that happen. Let's coordinate that marketplace activity, because early days of Lightning, it was basically Telegram chats. It's like, okay, I started a Lightning node. Who can I connect to? And, we're just kind of like looking around and being somewhat haphazard with the connections that we're making and spending Bitcoin transaction fees every single time we're creating a new connection.
And incapable to see other Lightning nodes that you would want to connect with.
Yeah.
That's the problem that one of the problems Amboss is trying to solve.
Yeah. Discoverability.
And as you're analyzing all of this data, what can you see and what can you not see?
So we can see the existence of a channel. So I know that a joint account exists, between you and I, but I don't know who has what money.
Can you see the overall liquidity in that channel?
I can see the total amount of Bitcoin that went in.
Okay.
And then I know that everything out of that is just a negotiation of who gets what in that set amount. So really that's what we can see. It's like we could see the entire map of a city, but we don't know what the traffic situation is.
Because you can't see the internal transactions.
Correct.
But you can see the liquidity, so then you could effectively link nodes that either don't have enough liquidity with some that have more than enough or whatever. This is basically just increasing the efficiency of the overall network.
Yeah.
And as far as the privacy goes, the existing system has an issue with privacy. How do you see that evolving over time where you can effectively send payment without censorship and without being tracked? That seems to be a problem.
Yeah, for Bitcoin as a whole, every coin in Bitcoin or every UTXO has a history. And that history can be traced back all the way to the point that it was mined, was first created. But in the Lightning Network, all the coins are really the same. It's really just, who gets what in our channel. So while Bitcoin has issues with fungibility, the Lightning Network actually gets rid of that. And any transaction, an individual transaction that happens in Lightning is not shared to the rest of the world. It's just between you and I, which just gets to that peer-to-peer core of Bitcoin. So from that respect, it's very private. It's actually extremely private, sometimes annoyingly so, because, we're trying to work on business adoption of Lightning. People want to be able to pay Bitcoin wherever. But for some businesses that are, very buttoned up and don't want to have any holes in their operations, accepting Lightning, where you actually don't know where the payment came from, like might be a business risk. So yeah, of course, we're going to have to serve those folks as well as like we serve the people that want privacy and that they should have privacy in their transactions. So we have to like kind of operate in this liminal space between like we want business adoption of Bitcoin and we want transaction level privacy. So how do we interface between those two and deal with all the discomfort that is happening in those different poles, in these different directions?
Yeah. Do you foresee any regulatory pushback or hurdles around Lightning and its privacy?
Yeah, I think overall there's a lot of resistance to it. I think there's an expectation, especially coming from like the government level, that you would be able to stop crime or stop people from doing bad things. Well, like the reality is you can't stop that
By censoring transactions?
Yeah.
Okay.
Or having full visibility.
Yeah, I kind of think of it more from the perspective of, you know, the history around transactions, so people pay their taxes. I think that's probably the biggest concern from my basic understanding that the government is dealing with these privacy tools allowing people to send and receive money. Yeah. Is they want people to pay their taxes, which is also another challenge to overcome to get Bitcoin to be used more as a medium of exchange. Like I personally use Strike and send payments out of the cash side of my app to a Lightning or a Bitcoin address if I'm going to pay for something in Bitcoin, so that I don't create some sort of accounting nightmare for myself.
Yeah. Makes a ton of sense. We want that service. I think, you know, governments, of course, want their tax revenue. They also want, in many ways, like want to be kind of world police and say, you know, I'm gonna catch the terrorists. I'm gonna catch the money launderers. And also, like when they're doing that, if you look at how the existing system works, it's basically like report the transaction that looks suspicious. There's no like obligation to stop it. It's basically, well, you have a reporting function. But yeah, I think just starting there.
And what do you think about Bitcoin being taxed as property and how that inhibits people from being willing to spend their Bitcoin? Do you see evolution there in the future? Is that going to be, continued to provide friction or a mental hurdle around Bitcoin as medium of exchange?
Bitcoin medium of exchange is super important. And because the government, or, I guess it's under the CFTC's jurisdiction. So they're looking at Bitcoin as property, as a commodity. And as a result of them doing that, we've got this obligation to do capital gains tax calculation versus, the dollar. So Bitcoin goes up versus the dollar. Well, now the government is able to tax you on those gains. But if you looked at Bitcoin in the way that a foreign currency exchange desk works, you would see that, a foreign exchange desk is not being taxed on the changes in currencies all around the world, because that's working capital for them. So having this interpretation is good in some respects from for some treatment, but it will actually inhibit our growth if we're looking at Bitcoin solely as property and not as a currency or a medium of exchange, as a payment system. And I think it's going to be more and more important, especially as Lightning Network becomes multi-asseted, because it will start to function like a foreign currency exchange desk. And we have to be prepared for that future. And additionally, because we've we've actually launched a service about generating yield from the Lightning Network. Actually taking Bitcoin that is being held in cold storage, put it to work as infrastructure on the Lightning Network. How do we want that Bitcoin to be treated? I think that is a certain structure of it that should support a different categorization. That this Bitcoin is not just used for investment purposes. It's actually being used for infrastructure. This is working capital. If I were to make an analogy, if you're running a power company, how should you be taxed on the golds that is in the wires that you're using? Should you have to pay capital gains tax on that?
Interesting.
Or is that, this is a material that you're using fit for a purpose that is truly infrastructure in your system? Don't make me do capital gains tax calculations on the wires in my power company.
Well, under the current tax structure, if you were to take your Bitcoin and you were to send some of it into a Lightning channel, it's still your Bitcoin. You haven't technically sold it.
Right.
So there's no taxable event there. But explain the yield to me, because that is a fascinating one. Basically, we've had issues with people trying to get yield on their Bitcoin in the past. The Blocksize of the world have got a lot of people wrecked and probably apprehensive, to attempt to use their Bitcoin outside of anything other than cold storage store of value. I'm particularly risk adverse. And so when BlockFi was offering 8% yield, I even had a buddy who straight up lost a lot of Bitcoin chasing 8% yield. I remember the conversation very vividly. I'm like, you want 8% more on this asset that's shredding? Like, that seems greedy, And so how do you generate yield on your Bitcoin? By sending it into a Lightning channel. And is that something that's is changing currently in our current environment?
Some things are changing. I mean, the ability to earn yield on Lightning has existed since it first started in 2018.
In the form of transaction fees.
Yeah, routing transactions has been a thing for a while. So basically, every time you create a channel, you can set the fee rate and update it however you'd like. I'll charge this percentage for passing on a transaction and using my infrastructure that I have with someone else. Like that's the way that things operate. So if you want to pay through me and use my Bitcoin road, I'm going to charge you a certain amount. So that's always existed. But now that we've kind of layered on a marketplace for creating new channels, it's opened up additional yield opportunities. So charging routing fees is using the existing infrastructure, but creating new infrastructure was more costly. So I'm going to have to use some of my Bitcoin savings and create a new connection to you, and I should be paid for that. So it really started off as like a Telegram conversation. Like, I only have so much Bitcoin, the other Bitcoin that I have is earning already, is generating routing fees. But if I'm going to close one of those connections and reallocate my Bitcoin to you, well, I should be compensated for that. And so this is the idea that we're exploring with our marketplace. It's that, everyone has their own fee rate that they're going to charge. What is their Bitcoin worth to them right now? Is it worth more to me in cold storage where it's more secure? Or is it worth it for me to actually move it out of cold storage and keep it on an always online server, creating these new connections and routing payments? So having to balance those two things. So we've kind of unlocked this ability to earn additional yield without giving up custody, simply by being willing to change my payment infrastructure and support new entrants.
Oh man, this is really tough to wrap the mind around. So how would you not give up custody of the Bitcoin? Are you loading it into your own Lightning channel that you have control over?
Yeah.
And then, so in that sense, there's not a lot of risk. What are the risks?
You basically always have your bags packed. So whenever you start this Lightning channel, I've got a signed transaction that I could always take to the Bitcoin blockchain. It's already signed by both of us, saying I've got an exit from this 2 of 2 multi-sig, which is a Lightning channel. So that means I don't need to trust you because I've got your signature on my exit plan. And I'm just using Bitcoin. So we've got a simple contract of how we exit from a 2 of 2 multi-sig. The additional risks. So I've got Bitcoin protocol risk. I've got the Lightning protocol risk, saying that there's some unknown bug there, but it's being updated all the time, similar to Bitcoin. Then there's some operational risks. It's basically I have to maintain a database that says what our transactions were, or what the result was. If I lose that information, I'm in trouble, because then I've lost accounting of where my Bitcoin's at.
And you could lose that information by losing the Lightning node.
You could lose a Lightning node. Sometimes databases get corrupted. Something that we have to work around. So sometimes power outages can, disrupt a node's database. But I think where we're at right now is we're basically using really high uptime infrastructure with, like lots of coverage on that front. But even if that happened, I still can separately store that backup to say, I have this Bitcoin. Was in this channel. I've got some record to say, hey, I should get my Bitcoin out of this. Use that last transaction, that signed transaction to exit.
And if you have a dispute take place amongst a Bitcoin Lightning channel, and there are other people in that channel that are trying to route payments through that channel, what happens if there's payments that are, in the midst of happening and there's a dispute and those two Lightning providers or one of them wants to settle to the main chain? Does it just stop the Lightning payment from going through? Does the innocent bystander, if you will, like if I'm just a random non-tech savvy dude trying to buy coffee with my Phoenix wallet and that channel that I'm linked into goes away because there's a dispute, then my payment just doesn't go through?
It will either do one of two things. It will either settle or it will fail.
Okay.
And fail just means you get your money back. Now for the hops in between, it might mean that a channel breaks up, or there's a forced close. So it's basically, people are broadcasting their exit plan. And that can happen if a payment is pending for too long. But overall, this is a set of trade-offs necessary to make a completely trustless money system. And there's a lot of engineering involved, lots of trade-offs. But overall, it means that you can pay anywhere in the world in, a fraction of a second, really. You can do streaming payments, essentially, whereas payment after payment after payment. You can do payments privately, and you can do payments in the most decentralized way possible, where there isn't someone that you have to ask any permission for, and you can do it at very low cost, and soon in whatever asset you want. So a payment could start as one currency and end as a different currency, and the exchanges happen in flight. And this is all within the span of a single Lightning payment that you've had great experience with. Whenever you go to another country, you go to Portugal, as we were discussing earlier, and you could just settle a payment at the drop of a hat.
Yeah. Gosh, it's such a hard thing to wrap the mind around for a retired farmer. Gosh.
Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few keystrokes. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your energy bill for 1 week per mining rig when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. And on top of this offer, you can also use code BREEDLOVE to get $100 off your first mining rig with Blockware Solutions. Bitcoin custody is evolving. Onramp is pioneering a new model, multi-institution custody, which eliminates single points of failure and adds fault tolerance to your setup. With Onramp's multi-institution custody, your funds are auditable on-chain, cannot be rehypothecated, and can only be moved with your explicit direction. Multi-institution custody simplifies private key management, providing unparalleled peace of mind for you and your loved ones. Onramp also helps you seamlessly tap into financial services like trading, inheritance, loans, and more, all without compromising on accessibility. So schedule a consultation with the Onramp team today to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove.
So as far as yield, what kind of yields can somebody get by providing liquidity to a Lightning channel?
So on the payment routing side, what we've seen historically is less than 1% APY. And for liquidity leasing, which is what we're calling creating a new channel. I'll create a new channel to you for a month. Historically, what we've seen is 1 to 4% APY coming out of those liquidity leases. And so I think that's really the next, where we're focused the most, and where we can automate is just I'll automate the fulfillment of that, because who doesn't want 4% APY in a trustless way on their Bitcoin? I think everybody wants that. So if I can actually use my Bitcoin for a productive purpose to support Bitcoin's evolution as a medium of exchange, I want to participate in that. And so we've done a lot of engineering to make it so that you don't need to give up a lot of control. You can give limited permissions to say, hey, Amboss, can you do this for me? And be like, okay, I will have the limited permission to open a channel for you. And that means that you can just start earning in a passive way by creating infrastructure. And we'll just do that in response to whatever the market wants. If we've got a new business popping up that wants to get connected on the Lightning Network, we can make that happen and pay the respective folks to actually open that channel to you and get you the liquidity that you need without the business having to think about it. Because we've been speaking in extreme depth about how this whole system works, but at the end of the day, nobody cares. They want to get back to, farming and whatnot.
Yeah.
They just want their money to work and their payments to be private. Is that too much to ask? And I would say no. We'll deal with complexity, and then you can just enjoy, the fruits of our labor and the ability to transact without permission.
Yeah. Do you know how many Lightning nodes there are globally? What are the estimates around that?
We see the public nodes, and that's just reported on our site. It's around 14,000.
Around 14,000. And how many Bitcoin nodes are there that are public?
More than that. I think it's around 100,000.
And this is probably obvious. You can't see the ones that are private that are, behind a Tor browser.
It depends. There's more than half of the Lightning Network actually uses Tor. And they will use gossip, and they'll publicly announce, hey, connect to me. I'm on Tor.
Gotcha.
That's basically how it works.
And Amboss is looking at that information as well.
Yeah.
Obviously, you would need to.
Yeah, if they decide to be public, then we'll report that information.
Gotcha.
If they decide to remain private, then we don't report that information. And we wouldn't necessarily even know that it was in operation.
Gosh, I would imagine that with the adoption rate of Bitcoin and like these treasury companies providing liquidity to the Lightning Network to earn yield has got to be something that people are going to start being interested in. I mean, you got all this Bitcoin just sitting there idly, right?
Yeah. So we're 3 months out from the launch of Rails, our self-custody yields product that's actually putting Bitcoin to work on Lightning. I think month 3, I think we're at 2,700 Bitcoin that is like ready to go. It just signed up. Now I've got this supply influx and all this interest from Bitcoin treasury companies, as well as just high net worth Bitcoiners that like want to do more with their Bitcoin. And with that supply, with that level of interest, like how can we support the evolution of this Bitcoin economy? Like who's ready to receive Bitcoin payments over the Lightning Network? Because it means for them, these businesses, that they can massively reduce their payment processing costs. Like right now they pay 3-4% to process transactions, and it takes like weeks to show up. And it can also be completely rugged. They can have chargebacks. And the Lightning Network does not have that. You've got final settlement happening within seconds from anywhere, completely privately. And what it means is businesses can adopt Lightning and pay 0.25%. Like that's the going rate for Liquidity right now. That's their entire payment processing costs, is that they could have money that moves faster, that does micropayments, that costs far, far less than like any of the other payment processing options. And right now, the biggest hurdle is that like, oh, well, if I switch to Bitcoin payments, then I need to hold Bitcoin. Isn't it volatile? And like, for the Bitcoiners, we don't care. Like we love the volatility. It goes up, it goes down, it goes up more. Like that's,
well said.
That's all we care about. But the businesses that are just adopting it for the first time, like they want some stable coin. They want some stable value. They don't like volatility. And what's now possible is they don't need to accept Bitcoin. We can use the exact same infrastructure and all of the, financial transportation work that we've already done on the Lightning Network. And they can just experience a small exchange right at the end. So that experience that you love with Strike, where it's going from your bank account into a Lightning payment and is received like instantly, everybody would have that experience, like without any of the like permissions that are required, and potentially without even KYC, is that you could actually just transact in whatever currency that you want. It will just hook in at the edges of the Lightning Network to do a small exchange at the start or at the end.
Gosh, that's wild. So forgive my ignorance here. So I have some Bitcoin. All listeners of the show have some Bitcoin. Let's say I'm like, okay, this sounds like a fantastic idea. It seems rather low risk. I want to provide some liquidity to a Lightning channel and earn some yield. Mm-hmm. As a retired farmer who's not super tech savvy, how on earth would I go about doing that? Like, where would I even begin?
Well, we built a service specifically for that, where they don't want to understand anything about the Lightning Network. They just want to, support this. And really, I think that's a good way to think about it, because this is a way of giving back to Bitcoin. What we'll do on our side is we'll create a new Lightning node for you. And as part of that setup process, you will be the only person that actually knows the seed phrase of it. So you get your 24 words, and we're running this server. We'll use voltage, and so you'll have high uptime.
Wait, stupid question.
Yeah.
How do I get the 24 words in a way that's secure that nobody else could have access to them?
I skipped a step. Okay. So first, you'll create a password. And that password allows us to do client-side encryption. So it essentially opens up a completely private channel to the server that is running, to your Lightning node. So you're only speaking there.
So I would need a physical Lightning node.
Yeah.
So I'm going to run a laptop. I'm going to run an Umbrel, a Start9.
Yeah, you could do any of those like physical ones, or you could use a cloud service.
Okay.
And we set it up with Voltage to get started, but really it's possible for us to ingest or use any infrastructure.
Okay.
So you could have a physical device, say, here's my Lightning node. I'm going to be putting my Bitcoin into this. I'll use it to get my seed phrase. So that's the first step.
Okay.
From there, there's this ability for you to actually set small permissions there. And so we'd call these macaroons, but basically it says, here's a permission to open a channel for me. You can't send Bitcoin. You can't receive Bitcoin. You can only open a channel. So we create that permission. We create the close a channel permission. We create receive Bitcoin permission. That is the permission set that you'll generate on your side, but you'll hand to Amboss.
Okay.
So that means that we're managing the connections for you, but not able to withdraw anything from your Lightning node. And that means that you don't need to trust me on any of these other permissions that you haven't given away those permissions. So like Amboss can't take your Bitcoin and send it someplace else. We can only receive, to your node. So, and then beyond that, you basically sit back and watch your money in action. So whenever we get an order, a new business starts up, they want to receive Lightning payments, or maybe they want to receive Tether payments. Well, we'll orchestrate that. And so now we've got liquidity suppliers, liquidity providers their Bitcoin is set up in this infrastructure. And now we can go take action automatically. Say, your Bitcoin is now put to work supporting another business.
It's a lot to wrap the mind around. It really is. Yeah. And I think this is a common stumbling block for a lot of people in Bitcoin. Like, we want to change the world. We want to see Bitcoin succeed. And in order for it to do so, it needs to be able to scale. It just seems like it's a complicated thing. It's something that should be so simple, seems so complicated. But I guess it's the incentives over time as more people figure out that they have this opportunity. The network will grow organically. It is interesting. What about other L2 solutions like Aqua? How do they differ from Lightning?
In a lot of ways, Aqua does use Lightning. I think what's been very popular is kind of bridging. And Aqua is like one of these folks that are using this bridging service, which is run by Bolts, which is another company. And Bolts provides this backend that is interfacing between the Lightning network and the Liquid network. And Liquid is a side chain of Bitcoin. So it's got its own blockchain, but it is linked to the Bitcoin blockchain. The only way to create Liquid tokens is to actually lock up on-chain Bitcoin. And then you can create new tokens. And the only way to get that back is to, essentially put the tokens back onto Bitcoin. So that's the way that Liquid works. And Bolts interfaces between these two. So Bolts is basically saying, I'll do the Lightning activity for you, for someone like Aqua, And then Aqua, you can deal with the liquid side of things, which is much more similar to on-chain Bitcoin. It's making a couple of trade-offs.
So that's a good explanation. So do you think there's a potential use case for any of these other cryptos? Like if you could build on Bitcoin and you can create tokens of any sort and interoperability like that, then why would you need any other blockchain? Like why do we need Ethereum or Solana or XRP?
I think what we're seeing more and more is the answer to our money problems is not create a new blockchain. I think a lot of the work that has been done on other, crypto tokens is like the valuable work is not on the token side. It's actually more on the smart contract side and how did like different parties work together. And what we have is this opportunity to actually start moving some of these like tokens or these different, a token is really kind of a monetary policy. Like you could look at it that way. Like a lot of people are interested in the investment side of it, which is a result of the monetary policy, the supply and demand. It's not like they're not even thinking about the actual tech behind it. Like the rest of it is like marketing. It's like, look at XRP, for example. Oh, I got a new bank integration. I've never seen an XRP transaction actually happen live. I've seen Bitcoin happen a whole bunch. But anyways, that aside, I don't see the purpose of having another blockchain. It doesn't fix a scaling issue. If you're going to create another blockchain, you're essentially doing a small multiple on the amount of transactions that Bitcoin can process. You're creating a separate blockchain database, and it doesn't really add anything. What we're doing with Lightning as a scaling method is actually making it so that we've removed the blockchain from the conversation. We can continue to transact on another surface that requires less global coordination. I don't need to update the entire world on me buying something from you. I can have that be completely separate. It's just between you and me. Like the purpose of a blockchain, I don't know really scales beyond the need for one blockchain.
Yep. I agree with you there. So couldn't you use Lightning to run our current dollar and fiat monetary system on the Lightning network?
I think it's what's going to happen.
That's like a Trojan horse type moment in some ways, isn't it? Like if you're using the Bitcoin protocol to have less friction around payments within the existing fiat system, that's a big deal.
Yeah. Then I wonder who are the Trojans here? Because, well, basically, are we Trojan horsing Bitcoin into the infrastructure of the world, of the financial infrastructure?
Or is it the opposite?
Or is, the government Trojan horsing stablecoins into Bitcoin and using that as a way to sell US treasuries? I think actually both could be true. And, I'm fine with that. The US government has a massive debt problem. They need someone to buy the debt. If businesses want to transact in stablecoins, which are just buying US treasuries, well, have at it. The US government needs to fix their debt situation, and they just found a way to do it with stablecoins and embracing that. Power to them. It was very smart. I'm glad that they figured that out. And Tether has become an incredibly profitable company, the most profitable company per capita that has ever existed, simply by buying US treasuries and giving people a token in exchange. Incredible business model. But Tether also has this problem that they can't scale their transactions. So they've been hopping from blockchain to blockchain, and I think ended up on Tron, which is there's one dude running Tron. It's a huge issue. He's I got one phone call risk. If the US government doesn't like what Tron is doing, well, then they just shut down Tron with one phone call. Like that's too big of a risk. But even Tron, as centralized as could be, is now at $3 to $6 per transaction. Like that doesn't scale. Moving to the next blockchain will not scale. So where we're at is we have to move beyond the blockchain. We move to Lightning, where transactions are actually scalable, to a technology where you can do a payment for every HTTP request. Like move the entire, not just global economy, but the future economy onto a system that is infinitely scalable.
Gosh, that's such a big deal. So the mega banks globally have to be grappling with this. Is that happening? And is that legitimately taking place today? Like is JP Morgan Chase trying to figure out how to integrate Lightning into their systems?
I think we're seeing much more traction on that front. I think people have to be prepared for this system. Like the technology that we're dealing with is incredibly disruptive. And I think the smartest people are actually focused on the things that will scale infinitely. And so they need to be thinking about not just what is my Bitcoin, what is my stablecoin strategy, but what is my Lightning strategy and how to get prepared for that. We're dealing with an incredibly complex system, but it's with the least assumptions of anything. I don't need to trust. We've removed that from the equation. And like, as the economy is like seeing more and more debt and like all of these bankruptcies that are like around, like on the horizon, how are they going to prepare for that? Like, do they want to be holding the bag, or like holding someone else's debt and never get repaid for it? Or do they want to shift to another technology that allows instant settlement so that they don't need to trust anymore?
God, seems like such a no-brainer.
One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is MindLab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. If you're listening to this podcast, you probably get it. You get that Bitcoin changes everything. For those of us that get it, it is important that we use a smart way to buy and hold Bitcoin. My friends at Coinbits, the oldest Bitcoin-only exchange in the United States, have recently pioneered the concept of roundups, which lets you turn your spare change into Bitcoin. Simply connect your payment cards and all your purchases will be rounded up to the nearest dollar, letting you stack sats without even thinking about it. My favorite feature is Coinbits Plus. For $10 a month, you get the best spreads on Bitcoin, which lets power users save on fees and buy even more Bitcoin. All that, plus peer-to-peer payments, target orders, price alerts, and more, means you can do almost anything you want to do with Bitcoin using Coinbits. So go to coinbits.app/breedlove to sign up today. Again, that's coinbits.app, coinbits.app/breedlove.
How does KYC play into all of this? Because if Lightning is going to find its way into our existing financial system, then you're going to need KYC in some capacity. Otherwise, that's a big problem.
Yeah. Okay. So there's going to be different answers for different people. And I think like we've got Like
and when I say that, it's going to be a
yeah.
big problem for the existing
Yeah.
system designed to continue to extract and steal from you. Obviously, all the freedom-minded individuals and every individual wants privacy, but those are two conflicting interests. So sorry to interrupt you. I figured
No,
I'd add that in.
So we've built software on the compliance side so that, businesses that, want to have very clean operations can do that. Like the same thing happens on the internet. Like if you want to log on to the internet, or do you want to log on to like CorpNet, like this completely like, whitelists only sites that you can access using your work computer. Like that's the way to think about this. Like I'm not going to connect to everybody on the Lightning Network because the entire world is on the Lightning Network and there's like criminals and drug dealers and terrorists and all sorts of things. But like that's the same thing with money. Like, do we want to have, official transaction, or, do we want to like keep our transaction private? I think, cash is a tremendous privacy technology, but it's not what everybody needs to use. And it's not appropriate for everyone. Like if you showed up to a business meeting, like in the boardroom and you're bringing in briefcases of cash, well, then you're going to start to question, is this the right, am I in the right room? Is everything legal here? Versus like, both things can exist. There's different ways to transact. When it comes to KYC, my opinion is that like we don't need everyone to KYC. It's infeasible to KYC everyone on the Lightning Network. One, nobody wants that information. It's a liability. I mean, some people say data is the new oil, and like incredibly valuable if you want to mine it for something. But it is the biggest liability in the world if like one spark enters this situation. You have an oil spill, like it's a disaster.
Yeah, tell it to Brian Armstrong. Gosh.
So like we have to be very careful because there are people that want to do KYC, that only want to deal with KYC peers. And like we'll be here to support that. So they can deal in their own kind of ecosystem, but at the protocol level, it is permissionless. So anybody can enter. So, for the businesses, they'll enact some policies. Like I'm not going to connect to North Korea. I'm not going to connect to Iran. Okay. So we'll create a custom rule set for you to operate, for you to be able to control what peers you have on a Lightning Network, and not mix your Bitcoin in these channels with these other parties. And we can even do that on the payment routing level. So if it's really efficient to pay through North Korea, well, that conflicts with my business rules. So my business rules might be, okay, I'm going to pay through, the CorpNet. So, well, we can just program that. This is fully programmable money. So like we built this product called Reflex, which essentially does that. It just alerts people according to whatever rules that they want to follow to say, hey, this conflicts with your rules. Here's what to do. Or I want to enact this policy. Okay, let's put it into operation. But the whole thing is permissionless. So there's going to be people that love to follow rules, whatever those rules may be. But then there's other side of things. Well, we just want complete freedom. And why not have both?
Well, then there's the individuals who don't want to follow the rules, but they will because they don't want to get in trouble. And so, I was listening to a Spaces on the way in today, just because I'm kind of fascinated with what's happening with Core and Knots. And there was a few individuals in the space kind of shitting on Lightning, saying that Lightning has failed. Do you think Lightning's success is inevitable, or do you think there's still a chance that Lightning is not the solution to get Bitcoin to scale?
I think it comes down to how much our willingness to wait. I think we've seen that this technology is where we should end up, and I'm willing to fight my way to actually make that the reality. Like you have to realize it. We need people to actually take these actions to realize this future, so that they don't get distracted with, this like explosion of layer twos that, many of them, maybe scams, or, we've got technologies that may be making other trade-offs that might not be okay, would not be completely trustless. And basically, like, where do we want to focus our time? Like, do we want another like crypto distraction to take us, down this like weird regulatory rabbit hole and, be distracted in blockchain land forever? Or do we want to take a more direct path, based on first principles of like, it's up to me to decide what to do with my money, and I can coordinate with other people to make that happen. Like, that is, freedom of association.
Yeah, and this idea that you can generate yield by providing liquidity to a Lightning channel or opening up a Lightning channel is inspiring, or makes me hopeful that Lightning will work, because, if you need people to be incentivized to do something, and if they're not incentivized to do it, even though it might be the right thing to do and it might help the world, there's not going to be enough people who are going to be willing to just take that philanthropic like approach, right? And so I do like that. When I hear that, it makes me feel like, okay, this isn't far off outlandish solution to getting Bitcoin to scale. I'm curious your thoughts on the knots versus core issue, because that seemed to have taken an interesting turn over the last week, with the notion that somebody could put filth on the blockchain in a way that could potentially make it illegal to run a node. The first thing I thought is like, wait, if you could put the worst imagery that exists on our planet on the blockchain, then isn't that an attack vector? Like, I would imagine the United States government or other governments would be like, all right, sorry, you fucking idiots, you guys messed this up, we're going to take over from here. Like, we'll have Jeff Bezos and Amazon, they'll run a node, Larry Fink can run a node, and Coinbase can run a node, but you guys can't. Is that a concern of yours?
I think when it comes to like dealing with the protocol, like, I think it's very important that the protocol remain neutral, like as neutral as possible, that it would look at the same way it looks at transactions. This is valid, invalid. This is not a good image, a bad image. It's just an image that meets the specifications. So, but where it becomes very challenging is that sometimes what is valid or invalid becomes subjective. I think that's where we're at right now. I think if for Bitcoiners that have this idea of the first pure money are offended by the idea that anyone would use it for something else, but that wouldn't be a neutral position. I think that is where it kind of defeats the neutrality of the entire system, is that we've got some technical realities that if I apply subjectivity here, what are the consequences of that? And I think for a lot of the folks that are diving into knots, well, they're essentially applying some subjectivity about what is spam in the blockchain. And while there will be some controls, they do need to be neutral controls over what actually gets entered into the Bitcoin blockchain. And then there's another layer to this, is like, what are the consequences of actually applying my rule set? If I do apply this, does that inhibit someone else's ability to participate? Does it prevent this from being a permissionless protocol where people can broadcast, the transactions of their heart's desire? Because if we start going down that rabbit hole, then we've got like OFAC enforcement at the protocol level. And I don't think that's where we want to be. We want neutral money, because that is what is unstoppable. This is operating on consensus rules. And what I see is the core is kind of taking the position here, saying that, look, the miners are saying that this is a valid transaction and they're entering it into the Bitcoin blockchain, and the incentives to do so. And if we start filtering transactions that are spreading across our network, then we're applying this subjectivity here that at the consensus level, they're not entertaining that. They're just ignoring the peer-to-peer network.
Well, isn't Core in its current version, it has an 83 byte, including the code, from my understanding, op return limit.
Yeah.
So there is an element of limitation there. There's a limit, and they want to blow that limit out to 100,000 bytes. Is that a concern at all? That does change one's ability to put things on the blockchain, and Core has been working pretty well up to this point. And I just always think about something Michael Saylor said, a year, 2, 3 years ago. He was just like, don't change it. Just don't change it. Don't break this thing. And like, I think a lot of the Bitcoin community, and I see it on X all day long, run knots. Most of the people who are vocal about what they see and want to happen with Bitcoin are leaning that direction. And I think it just comes from a place of fear. Like, I experienced that fear myself. Like, could we just not mess this up? Like, just not mess this up. Like, this is such a huge deal. Why are we talking about making such a big change? Do you understand what the idea is? What benefits do we have if we increase the op return to 100,000 bytes? Like, how does that make Bitcoin better? And then on the flip side of that, how vulnerable does that make Bitcoin? How could that affect its decentralization? This is the first thing I thought when the conversation changed, is like, oh my gosh, like, this is now the potential. This is something that I could imagine, I could visualize taking place that would cause some sort of like regulatory clampdown or self-censorship. People just unplug their nodes, like, oh, I don't want to get in trouble. Like, that's a problem. So there's 2 questions in there. Let's start with the first one. Like, what's the reason from your understanding why Core wants to make the change that they want to change or make?
I think the like second order effects are like less damaging. So like, as a benefit of expanding the op return size, the people that are putting other data in there, arbitrary data, would actually pay more. So, okay, it would be more rewarding for miners. And like, it's preferable. Like, if they're going to do this, well, it's less damaging if the data is here in the op return rather than in the witness data.
Because that would, I'm not super tech savvy, I've said that several times today, but that would prevent us from having like one transaction, as an example, like take up the whole block. Like, you could still pack a lot of transactions into that block by having the larger op return, and you could then put the non-monetary data in there.
I've probably reached the limit of like my tech understanding at the protocol level of where that could be. But basically, the data is going to go somewhere. Where do we want it to be? I think Core is taking the position that's preferable for them to actually, for that data to live in the op return rather than elsewhere. And as a result of that we would actually, like, whenever you broadcast a transaction, it's bouncing around this peer-to-peer network. And so more people get to see it, that this is what is coming. This is what wants to be in the Bitcoin blockchain. And if we have more visibility into that, then there's benefits to saying, oh, okay, well, I know what the next transaction fee is going to cost. Because if you don't have that information spreading around, then you've got, messages that are silently being passed to the miners that, are going to mine this transaction. And for everyone else, well, your transaction, well, I thought I paid a high enough fee for this, but it's actually not going to get accepted because there's a dark pool of information that is going to the miners and it's just showing up in the Bitcoin blockchain. And that's not a good situation because, as a data guy, I like to be able to predict things, use some data analysis to see, well, how much should a transaction actually pay? If we figure out that, then we've got a whole RBF debate, or replace by fee, on replaceable transactions, that we can kind of avoid if we actually know what a transaction is going to cost.
And we would know what the transaction is going to cost if we don't change the op return. Or are you saying that we would know more clearly what the transaction is going to cost if we do change the op return?
We would know what the transaction cost is more clearly if the data goes in the op return, if they actually expand that.
Okay.
We take Core's position.
So that's what Core is trying to achieve, at least in your basic understanding.
Yeah.
Well, the decentralized element of Bitcoin, like Bitcoin, people being able to run nodes is very important. And so it being the base layer, this monetary protocol, if Bitcoin's decentralization is jeopardized, then so is Lightning's, right?
Yeah.
That's a big problem.
Yeah, we can't make more decentralization on the second layer.
Right.
You can only do less.
And so maybe I'm not understanding your answer, but so are you concerned about the change to the op return or not? And I guess that would just be your opinion on that. Does it seem to worry you too much?
I think expanding the op return would make a lot of sense.
You think it would make a lot of sense? And do you think that if filth gets inscribed on the blockchain in a way that it currently can't, that we have regulatory issues that we could potentially be facing? Or is the game theory play out in some sort of way where, like, okay, other places are going to run these nodes, the network's still going to exist even if this jurisdiction says, hey, you guys can't run a node because there's bad stuff on the network?
Let's see, that bridge has already been crossed. There's illegal stuff in the Bitcoin blockchain. It's not possible to stop it. I think trying to stop it, may just end up hurting us more in the long term.
Okay. Well, being a not super technical individual myself, you don't seem to be super concerned about that. So in some ways that kind of makes me feel a little bit better generally about the conflict that's taking place.
It can happen regardless of what we do.
It feels like Blocksize Wars 2.0, but maybe even a bigger deal. At least the way the debate has taken a turn over the last week.
I don't know if you know Casey Rodimer.
Heard the name.
Yeah, so he was behind the ordinals inscriptions and figured that piece out. And I think at one point he said there are two phases to understanding this, to understanding inscriptions. There's the seethe phase, and then there's cope. We're furious that this is possible, but we realize that we cannot stop it. And that is permissionless. Sometimes permissionless things are ugly, and sometimes they're beautiful. What we have is complete freedom with Bitcoin, and it is just as neutral as you can get. And by being permissionless, there's going to be things that you don't like. But at the consensus level, we have to have an understanding that some things I'm not going to like, some things I'm going to love.
Yeah, that makes sense.
So there's a very special place called the Farm at Okefenokee. It's a 1,000-acre regenerative farm community about 45 minutes northwest of Jacksonville, Florida. The farm is a completely off-grid community. It has total food, water, and energy independence. Everything on the farm is 100% organic, and it even features wild boar and bear hunting. The farm at Okefenokee is right next to the Okefenokee National Wildlife Refuge, where you can do camping and canoeing tours. So if you're like me and you're interested in the self-sovereign lifestyle, then you can get your own lot on the farm at Okefenokee if you tell them that I sent you. Once you get a lot, you can build one of 3 custom cabin options. So if you value freedom, self-sovereignty, and living in touch with nature, then join me and my family. We have lot number 21, and we're going to be building a cabin there starting December 2025. To learn more about the farm at Okefenokee, go to okefarm.com and make sure to tell them that I sent you. If you're a Bitcoiner, you need the Orange Pill app. It's where you can connect with other sovereign individuals locally and globally. It's great for when you travel, to meet local Bitcoiners, to go to Bitcoin meetups, and to find local merchants that accept sats. No distractions, no noise, just real Bitcoiners. So download the Orange Pill app today and find your local Bitcoin tribe.
Gosh, this has been a fun one. Kind of brain wrenching for me, but I've been definitely enjoying it. I'm curious, what other applications do you see that Lightning can provide? You know, I know that, Whitney Webbs of the world and talking about BlackRock, they want to blockchainify everything. Like, is Lightning a solution to that desire, or is there anything there, or is that?
Yeah.
What are your thoughts on that?
I guess for the Whitney Webbs of the world, that we have transaction privacy, and we're operating at a level that is truly peer-to-peer. So there's nothing systemic that could be attacked, from like nation state perspective. For the Larry Finks of the world and the people that love their blockchains, what we can share with them is that essentially you can have whatever token you want on the Lightning Network and use that as a currency in a single Lightning channel. So this is our currency, just between you and me. And that is completely possible. And really it's up to us how we're going to exchange an interface between Bitcoin and, our fractionalized real estate. I own an apartment building, and that's the currency that we're using between us two. We're just kind of splitting up. We're immediately fractionalizing this real world asset. And we can kind of move, all of those questions about, what ties this token to this asset, like outside of the conversation, because Lightning really only cares about what token are you moving, between two people. And so that's one way that we can kind of just move beyond this like blockchain everything conversation. Because I think at the end of the day, people are realizing that it doesn't actually provide additional value. I think there is additional value when it comes to, smart contracts and like how different people will interact. But at the end of the day, if you're just moving tokens around and payments is your use case, then you want to focus on the thing that scales the most, which is Lightning, because it's really a matter of, like, fundamentally a transaction is you and me doing a digital signature. Like, that's it. That's the cost of a transaction for Lightning. Like, that's the limit of what it goes to.
Interesting. So another thing that I've, thought a bit about, and is especially with stuff like Nostr becoming more and more of a thing, but with Lightning and your ability to send payments so cheaply and easily, that really is going to have an effect on how people monetize their efforts, specifically in the creator economy. But I would imagine that those implications go far beyond that. You can directly zap people sats on Nostr. I mean, do you see that becoming something that's common in the world outside of social media? Or do you think this is scales to like YouTube in the future where people are like getting direct payments sent to them?
Yeah. When we have unlocked this technology that allows us to be infinitely scalable, well, then we're unlocking new use cases where essentially this idea of streaming money, where it's a payment that can happen so frequently that it's as if it is a continuous flow, kind of reinvents the idea of what is a cash flow. And I think the barrier to entry in Lightning is so low that like you basically need to have a private key, and that's about it. Now, like with that, like that's like at the Bitcoin level, like that's what you need to participate. And Lightning is kind of breaking up these Bitcoin transactions into, smaller and smaller pieces so that you can just participate. You can get paid, micropayments continuously. Like as a creator, that's so important. Additionally, and what, folks like Fountain have been exploring is like, as a creator, you actually get to see like what time in your recording, like, did people tip or send additional money?
Oh, wow.
So
that's a trip.
You actually get like additional data and insight, and not just like what people are liking, but also like what particular content is resonating with people. And you have a value attached to that.
That's interesting. I never thought about that element of it. Okay. Another question. What changes, if any, need to be adopted on the Bitcoin protocol on the main chain to help Lightning scale?
There's quite a few things on that front. One, I think we spoke a bit about this before, but can we pack all of the data of the entire Lightning network into Bitcoin? Can everyone participate? And we're going to approach a limit where, not everyone in the world will be able to have their own Lightning channel. And if you have a Lightning channel, that means that you can permissionlessly participate. So at some point in the future, like, we may decide that like everyone should be able to fully participate permissionlessly in Bitcoin, in the Lightning network. It also means that like not everyone will be able to experience one Bitcoin transaction, because here we're replacing one Bitcoin transaction with one Lightning channel transaction, which is a more scalable form of a Bitcoin transaction. But we want people to permissionlessly participate. So we'll, as a takeaway, we'll have to think about, do we want to increase the block size or increase the amount of data being stored on Bitcoin, in some way? And it may be hard to conceptualize this at this point, but it will be something that we'll need to think about, because we want to be able to.
Wait a second. Yeah. So many Lightning nodes that they would effectively take up all the block space. Moving in and out of Lightning channels could consume the existing block space.
Yeah.
So we would need to increase the block size at some point, in theory.
Yeah, that's if we want everybody to be able to have a Lightning channel, we have to increase the block size.
Do you see a future where everybody has a Lightning channel?
We'll see. There's other ways to participate. I think we're seeing a lot of innovation on the cashew front, which is like the Chaumian eCash, perfectly private money, but it's happening within custody. So this is a really cool idea that you could have completely private money where not even the custodian knows whose money is whose. And that is being built on top of Lightning. So it could be an evolution where we see Lightning bring incredible scale to Bitcoin, but it's not going to answer everything. But if you have some type of, trustless custodial relationship, that might be an additional way to scale this so that everyone could trustlessly participate and permissionlessly participate in Lightning or in Bitcoin. Because at the end of the day, that's what we want. Because, our job is to move the entire global economy onto Bitcoin. How are we going to do that? Like, I know I need to scale how Bitcoin operates. That pushes me to Lightning. Now, can Lightning take us all the way? Maybe we need to introduce some additional technologies in order to make that possible.
Oh man, do you have any concerns about this Bitcoin succeeding? I know we've talked a little bit about knots and core and potential attack vectors. I mean, you're pretty deep in it. Do you lose sleep at night over anything here, or you just got your head down, grinding, trying to solve problems?
I lose sleep because I'm so excited about building on this every single day. Like as an engineer, and like I see this beautiful system that is imperfect. It's like the Like I've sat at a table at an incredible restaurant and the table rocks slightly. Like as an engineer, like I cannot help myself but want to be able to fix that because I've got this like slight like detail that I want to fix. And like I'll just keep working endlessly on that. And I think the biggest risk for an engineer is to have them work on the wrong problem, optimize the wrong thing. But I think we've had, so many people work on the fundamentals of, what's important, like what is money, be able to focus on that detail to make sure that this is the most important problem that I could be working on. And like, what else is there that I should focus my attention on? And I think some of the work that you guys have done has helped shed light on that this is like the highest calling for me to work on this fundamental way that we communicate value, like all around the world. And I want that to work as best as possible.
Man, I agree with you on that one. This seems like the most important thing happening in the world today, as crazy or hyperbolic as that could sound, they're, I don't know, selfish or ignorant. There's a lot of bad things happening, but it seems that the incentives are so heavily broken because of our broken monetary system. It's hard to see anything outside of fixing the money. With that said, is there a call to action? What can people do? What can people do to increase the probability of success or increase the time in which we can Bitcoinize the world, I guess, if you will?
I would say that what people can do right now is to start accepting Bitcoin as payment. And if that's a difficult process, like Amboss is here to help. We want to be able to have everyone be able to receive Bitcoin payments. And fundamentally, it's cheaper to earn Bitcoin than it is to buy Bitcoin. If you don't have to pay this exchange rate or these exchange fees, and you just start converting the value that you already bring to the table into Bitcoin revenue, like that is possible. And, we're here to help make that happen.
Perfect. And where can people find you on the internet, and how can people find Amboss?
You can go to our website, amboss.tech, see all of the crazy stuff that we've built on this new monetary front for Bitcoin. And then, of course, you can follow me. Always find me at Amboss Tech, but at Jestifer_BTC.
Perfect. Well, my brain hurts in a good way. I appreciate this conversation. This has been a fun one.
Thanks so much, Eric.
Yep. Thank you.
We lock our doors, we encrypt our hard drives, and we use strong passwords. But most people leave one thing wide open: their phone line. SIM swap attacks are one of the fastest growing methods of digital theft. In minutes, a hacker can clone your accounts, reset your passwords, and drain your life. Unfortunately, this is not science fiction. It happens every single day. Efani is the only mobile service protection designed exclusively to protect you from SIM swap attacks. Efani offers military-grade encryption on their product and offers up to $5 million of SIM swap insurance. And to date, there have been exactly 0 SIM swaps on any of Efani's over 50,000 protected accounts. So you don't need to live in fear, you just need to protect your weakest link. Go to efani.com/breedlove to secure your phone line today. Again, that's Efani, EFANI.com/breedlove. For the past 25 years, I've been reading roughly 1 book per week. Almost entirely difficult nonfiction books, the kind that really shift your thinking. Books on physics, money, power, psychology, spirituality, and philosophy. The real stuff. But I get it. Most people don't have time to read 50 books per year. So I hand selected my favorite nonfiction books and distilled each one of them into a course that you can take in 50 to 100 times faster than it would take you to read the entire book. Each course gives you the key insights, mental models, and frameworks that matter. We launched with 15 book courses, and we are building toward a library of 100 by the end of year 1. So if you are a seeker of truth, wisdom, and personal growth, then my book course is for you. To sign up, go to course.breedlove.io. Again, that's course.breedlove.io. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.